from Peter Spina, the founder of goldseek.com. He's been in the sector for 25 years, which means that he founded Goldseek when he was 2 years old, as you're about to see. And he's going to talk to us about precious metals. He says they're on the verge of a historic run. So, Peter, please take it away.
Great, thank you. Yes, I started the site when I was quite young, not quite 2 years old, but I've been investing in this sector for almost 30 years now. I started goldseek.com in 1995. When I was 15 years old, I bought my first stock when I was 12 or 13, and my first gold silver stocks when about 13, 14, right at the bottom of the gold market. So I kind of find that interesting because there's similarities to what happened when I started investing in the mid to late 90s in the sector to today. Even though the gold price is up about 250, eight times from that low, the opportunities in the mining stocks are quite incredible right now. So I'd like to talk about that as well today in this presentation. But yeah, so just a little bit of my background. Again, I've been in the sector for about 30 years. I founded goldseek.com. We're one of the largest precious metals news and information sites, along with silverseek.com. I have been an investor in the junior sector for about 30 years. I have a very strong passion for gold and silver as money, what it represents as honest money, and what its role will be here in the coming future. Yeah, if we could get the presentation up here. Not getting anything. Before it starts, yeah, there. But okay, we'll wait for the presentation to show up. But I say one thing about gold. Oh, here we go. Okay, if we could get to the first slide here. Let's go back real quick. There we go. Okay. So the title of my presentation today is Gold is on the Verge of a Historic Run. And I think maybe the better way to say it is that fiat currencies are on the verge of a historic value destruction. We are in a period where fiat currencies, which are backed by mostly trust and debt, are going to have to face a day of reckoning. And the only place to hide will be in certain assets, including precious metals. I like to say that you buy gold not to make money, you buy gold to prevent losing money. Gold is constant. The gold price, you look at the gold price and gold's $2,000 an ounce. Well, no, the gold price is being quoted in dollars. A dollar is one of 2,000. It's the reverse. It's one of $2,000 an ounce. It is the dollar that is falling. It is dollar that is hitting record lows. And gold is the way to measure that. A lot of people look at the dollar index to see what the value of the dollar is. No, you look at the gold price to see where the value of the dollar is. So I haven't been to many conferences in the last 3 years. None of us have because of this lockdown, COVID mess. But a lot has transpired in the last 3 years. So before I kind of get into what's going to come up next, I want to recap what happened in 2020, 21, 22, the last 3 years, which has taken us to this point. I think there's about three main themes. COVID hit, which is the big issue, but what happened in the financial monetary world, and where are we now with all this? So the reaction by central banks is always quite predictable. There's a crisis, there's a financial crisis, there's a certain problem. The central banks come in, they print a lot of money, and they try to paper it over, and things should be good again. But that's not the case this time. Central banks came out in 2020 in reaction to the lockdowns by printing a lot of money, and as Jay Powell said, we came out with a monetary bazooka. And the result of that was an incredible increase in the monetary supply, not just in the United States, but in Europe and all around the world. You saw the central banks just enter the markets, into the treasury markets, bond markets, into the mortgage-backed securities, cutting rates down to zero, printing all this money. Governments were just handing out money left and right. And times were really good. 2020, 21, the markets were exploding. The real estate bubble was on fire. You had cryptocurrencies going through the roof. All this easy money was floating through the system. Everyone felt very wealthy, and everything seems to be going great. And then we get into 2022, where the price of free money is paid, inflation. So in the past year plus, inflation has become a dominant theme. Actually, I want to make one quick point, sorry. On this chart here, we see the explosion of the M2 monetary supply in the United States, and next to it is a chart of the central bank's assets. And you can just see how quickly they reacted to the situation by just buying up trillions and trillions and trillions of dollars of assets. Well, that $29 trillion of asset values on their books, it's not worth that. If you were to market those assets, it'd be significantly less. In 2018-19, the Fed and the central banks were doing a little bit of a quantitative tightening, and then things suddenly stopped. And this was before COVID, so things were starting to already get interesting before COVID hit, and then COVID hit, lockdowns hit, and then this whole new monetary expansion, central bank reaction happened. And we saw, you can see on the right side, this almost slingshot higher in asset values. Currently, we're going under a quantitative tightening phase right now, which seems to be almost questionable of how long this will last. But there are central banks like China right now, which they're undergoing a quantitative easing cycle. So around the world, there are some banks that are tightening and some that are easing. So the inflationary explosion came after all this money was printed. It started circulating through the system. The velocity of money supply started to increase, which we haven't seen for decades. You just really didn't see the inflation show itself. But now the inflation, all this money that's been created, has starting to represent itself in price inflation. We've had the monetary inflation, but now the money's circulating through the system more, and price inflation is showing up. Well, there's different reasons for inflation really getting aggressive now, but the dominant theme is the monetary supply. We have war and supply constraints hitting, but inflation wasn't really felt much in the United States. They talk about, oh, inflation rate's high in the United States. Well, come on, go look around the rest of the world. I live in the Czech Republic. We had over 20% inflation rates. Our food prices, in many cases, the last few years have gone up 30, 40%. So having the U.S. at around a 7, 8, 9% inflation rate, it looks quite nice when you're in Turkey and you have a 100% inflation rate. And I think that's important because if you want to look at the gold market and you want to understand the gold price, you have to look at it in a global sense. It's a global market. Everyone has their own perspective from their own local currencies and their own situations. We have a period now where the inflation rate has peaked. There's this disinflation now. There's a period now where inflation rates are slowing. But I think what we'll see here in the near future is that inflation is not going to go way down. It's not going to come back to its 2% inflation target that the Fed wants. We're going to have inflation that's sticky. It's embedded in the system. They can't kill it off. If they really wanted to kill it off, they're going to create a horrible deflationary scenario where the debt really starts to collapse. And we're already seeing those pressures happen. So now the question is, what's coming next? I'll get into that here in the next slides. But one other theme that I think really changes the entire situation in that it accelerates the timeline of a lot of things that have been happening for a lot of years, a lot of decades. The war in Ukraine is not just another typical proxy war. This is a war that's really defining where the world is. It's a division line. You're really seeing this Cold War 2.0, or someone's calling it the freezing war return. And this is a very dangerous situation, even though that the media has been kind of more quiet about it recently. Well, this is a horrible war. People are dying by the hundreds every day there. It is getting worse again right now. And you just see these divisions taking place where you're either with us or against us, as the U.S. says. And the world is choosing sides. So you have two different spheres, two different parts of the world coming together. You have the Western and then the other part of the world that is against us. And this has a lot of implications on the monetary front. The war is expanding into that side, into the financial sector, and so on. So this is really going to move how things play forward, how these things develop at a lot more aggressive rate. This is a very historic moment geopolitically, monetarily, and for the U.S.'s almost dominance as the U.S. empire, the imperial dollar. This is a real big issue and challenge going forward. So going from 2023 on, we're going to have a lot of instabilities. A lot of things are happening now on a daily basis. You would have these big geopolitical events that would dominate one or two things a year. Every month there's one or two or more. You have Saudi Arabia getting more closely aligned with China. You have yuan for oil being swapped. The petrodollar's dominance is being challenged. And countries saw what happened. Russia got their cash, their $300 billion that they had in dollar reserves were just cut off immediately because they did something against the West action. And the rest of the world, whether it's China, Brazil, Saudi Arabia, they're all nervous now. They see, what can happen to them if they don't protect themselves. And so they're looking around for solutions. And, it is kind of hard to find solutions to the US dollar. As much as the yuan is going to become a competition, it's not quite there yet. Secondary currencies, even the euro, they're not going to be able to replace the dollar right away. The only money out there that's going to be able to really become the de facto competitor to the dollar is gold. And if you're going to be de-dollarizing, gold becomes that go-to unit of trust. So stagflation is here. We have had this huge inflation explosion. It's coming down a little bit, but inflation is here to stay. You have growth that is coming back. You have some economies teetering on no growth going into recession. And this is looking like 1970s redux. You're going to have a decade-long period where you have very low growth to no growth, and you just have ongoing inflation, which is a horrible scenario because people's standard of livings fall, and people will really notice what these decades of mismanagement in the finances and the debt and all this is going to come. The day of reckoning is coming. So this is going to feed a lot of instabilities around the world. There's a lot of posturing and things happening as we speak. We'll see how the division, how the U.S. reacts to it, how China reacts to this, how this all comes together. But we do see an attempt with like the BRICS nations and other countries, again, swapping currencies and trying to get out of the dollar. It's not going to be an easy thing to do, but it is something that the world is trying to do here. Capital controls is something that everyone needs to be worried about. It comes in many different forms, whether they restrict how much money you can take out of your ATM, how much money you can leave the country with, how much money you can leave the country without being taxed, how much you can bring in, and so on. So depending on where your location is, now is a time to make some contingency plans, because when things get really difficult, when the day of reckoning comes, when you have an overnight revaluation in a currency, you have to be protected. You won't have time to react, so you're going to have to do things now to protect yourself from these issues, whether it's protecting your wealth, your savings, or if it's, hey, I got to get out of this country. How do I get out of here with my assets? How do you get out of here without the government taking a 90% exit tax or whatever? It is a big issue. We see capital controls in certain parts of the world right now, whether it's Argentina. You see other controls even in the gold side happening in Ghana and other places. I'll touch on that here in a second. So we've had about a year where interest rates went from near 0% to about 5% in the US. We had over a decade-long period of ultra-low depressed rates, which encouraged these bubbles to form, which encouraged people to speculate, to take huge risks, to leverage, to speculate. And we've had decades of rates just declining and declining, and suddenly in the last year, huge increase in rates. And it's not like 5% is a huge rate to deal with, but compared to this period of ultra low rates where everyone's been financing their debts at near nothing, well, this becomes a big issue. And the consequences of this is you're going to see defaults on debt happening. And we've seen some of the consequences already hit in the banking sector. Some of the top banking collapses in the United States happened over the past several weeks. No one saw it coming. Well, some people saw it coming. Very few people were warning that banks are a store of risk. But most people have no idea what's going on. They're suddenly scrambling and saying, oh my gosh, my bank can collapse. Thankfully right now the FDIC and the government is trying to bail them out. But you're going to see more and more of these financial institutions go under. And at a certain point, like in Europe, bail-ins are going to take place and the depositors are going to become the ones who are bailing out the banks. So you'll see people who can lose a lot of their savings by keeping their money in the wrong institution. So right now is not a good time to be keeping your money in the bank. When you put your money in the bank, you're lending the money to the bank, which goes out and then lends it out and leverages it. So these guys have very low amount of cash capital on their side, and as you see these defaults happening, boy, it can happen quickly. As you can see on this chart here, you can see there was hundreds of bank collapse in the 2008 financial crisis. We've had 3, and some of the largest ones that have occurred in the history of the United States. And things are just getting started. I mean, again, the rates only have gone up in the last year, and now we're already seeing significant issues. So what's coming next? I don't think we fully understand it. I know Powell said the banking crisis is over. Oh, it's not over. There is so much more to come. They're just playing a game of psychology to prevent bank runs and people from understanding what's happening. But they're in a tough position. I mean, the Federal Reserve, for them to come out now and cut rates and start injecting tons of money into the system, it's a problem on the inflation front. They're in a very difficult spot right now. It's like, what do you do? So they're going to be forced to take some difficult choices, and eventually I think they'll do what they always do, is they'll come in, and when things get very difficult, the central bank's biggest fear is a deflationary crash, one which they lose total control over. So they'll come in and try to support these banks, these financial institutions, and so on by injecting trillions and trillions of dollars more. And I think gold is sensing that. We saw the gold price move from its low late last year, from $1,600 to over $2,000 an ounce, and people are wondering what's going on. Why is gold really moving? Well, now I think we're getting indications. We know why gold is moving. Sure, there's strong demand from central banks and other investors, but I think some of the reasons that these large institutions are buying gold because they know and they see that things are starting to come apart. So what is the best environment for gold? In the 70s, what took gold up from $35 to $850 an ounce? Well, it was also the end of the dollar, international gold dollar reserve. Nixon delinked the gold from the US dollar, and gold became more freely traded, and the free market was able to discover the price. But it was stagflation, that decade of stagflation, which really fueled the gold price higher. And we're going right back into that scenario. All this debt out there, all this money that's been printed out there, we have to pay that off at some point. And stagflation, it's here, it's happening, and it's starting to develop around the world. So stagflation is excellent for the gold market. You don't have a lot of other competition from other industries. Gold did really well in 2020, but most people really didn't notice because you had tech sector, you had crypto, you have all these other sectors that were going through the roof, and everyone was just chasing that. Gold just kind of fell to the background. I think what happens now is that gold, maybe silver, some commodities are going to do well, but there's not going to be too many great sectors out there to be investing in, which will really make gold, silver, and the sector stand out. Gold is a precious unit of trust. In a world where you have dividing lines, countries not trusting each other, people are not trusting the currencies, gold plays an important role to reestablish trust, where fiat currencies are backed by trust, and those fiat currencies are being devalued. The trust is falling. So gold will become an important player here as the world starts to de-dollarize, looking for alternatives. It is not going to be an easy process to de-dollarize. Again, what is the competition out there? You have the euro, the yuan. Yeah, there are options, but they're not excellent options either. So the world is going to end up going to gold, and we're seeing that in big, big ways. The share of the dollar reserves still are about 3/5 of the world's foreign reserves. There is some yuan buying and euro, but overall, the dollar is still the king fiat, and it's going to be hard to dethrone that. It's a process. I don't think it's going to be something that happens overnight unless there's some huge event. But right now, it is something that's going to take some time. But we see the trend starting. Central banks had an incredible appetite for gold in Q4 2022. We've had over 50-year historic demand from central banks buying gold. China, recently we've seen Singapore buying a lot of gold. A lot of Eastern European countries, Poland, Hungary, the Czechs are now buying, central banks buying gold. Asian countries, Turkey, the world is buying a lot of gold. Central banks are really accumulating in a significant way, and this is underpinning the fundamentals of the gold market, the gold price. Q1 data just came out. I saw something this morning from World Gold Council. The Q1 gold demand from central banks has come off some, but we're still seeing steady buying from China, from again, Singapore and other countries. And this is going to continue as these countries look to diversify their foreign reserves. So how do you prepare for this scenario? Gold and silver, I did this presentation a few months ago, and gold was $1,700, $1,800 an ounce. Everyone was very discouraged. And now gold's sitting just below record highs. All of a sudden, people are starting to realize, wow, this actually might happen. Gold and silver are sitting at very key points here, especially the gold market. Silver is going to start making its move here, I think, soon. But now is the time to make the moves. I don't think you have a lot of time left to really prepare. The stealth move in the gold and silver markets have been taking place, but now it's starting to get recognition by the mainstream media, and investors are starting to come into it in a big way. I even saw Elon Musk talk about gold this morning on Twitter, so it's starting to get more mainstream. I think what I've noticed from speaking with a lot of gold investors, a lot of them seem to be stunned. They're really unsure. A lot of them have actually been taking profits at $1,800, $1,900 an ounce, $2,000, waiting for the next price drop. And I think this is an incredibly wrong move to make. This is not a time to be trading. This is a time to be building your positions and preparing for the big breakout move. Because when this market moves, it happens very quickly, and you're either in it or you're going to be watching it take off on you. In a blink of an eye, these mining stocks can double, triple, or more. It's incredible when the market does run what it can do. I'm a little bit running out of time here, so I'm going to kind of go through the mining stocks. So here's a technical view on gold. We're pushing record highs. This is not going to be the easiest move to break through right away. It may consolidate around 2,000, but once we break through that $2,100 an ounce, boy, you're going to see the momentum buyers jump into the market. You're going to just see all sorts of short covering, momentum buyers, new buyers. People are going to be flooding into the market, and quickly you're going to see gold 2,300, maybe 2,500, 2,750. Those are some of the Fibonacci extension technical targets. But gold, once it breaks 2,100, it's going to make a quick run here. For the euro side, the euro, the chart got overlapped there. The euro is also a similar chart, but a lot of foreign currency gold prices are breaking out to record highs. Here's the yen gold price. A lot of foreign currency gold prices are making new record highs. So it's not something that's exclusive to the US dollar. The US dollar is actually one of the last gold markets to hit all-time record highs. Little silver market here. Silver has just been left for dead. People just seem to just have given up on it after the last run up to $30, and it collapsed down to under $20. But boy, I think they're making a huge mistake. Silver has the fundamental setup here to make an incredible move. Silver Institute came out with the latest data, which is showing a structural deficits. We're going to be running supply deficits here in the silver market for years to come. And when you get a little bit of an investing interest in the silver market, it doesn't take a lot of capital to take this market through the roof. Technically, break through $30 an ounce, you're going to see this market run to $40, maybe even $50 an ounce on the first initial run, and then we'll see it go a lot higher. If you take the inflation-adjusted highs for silver from 1980, you're looking at almost $200 an ounce using the official government inflation data, which we all know they massage, which is significantly probably is understated. Gold's all-time record high, I think, is like $3,200 inflation-adjusted. If you use shadow stats, John Williams' numbers, those are several times higher than that. So gold and silver stocks have just been left for dead. People just have gotten disgusted. They've thrown it into the waste bin. I don't want it. Made money, then lost money. They just walk away. And this is a typical sign that we're at the bottom of the gold market. You look at the HUY, the GDX, GDXJ, we're at half, or we're 50, 60% below what the highs were in 2020 when gold was around the same price, and silver, not too far away from the same price. We are going to see an absolute huge jump in these gold and silver stocks once the gold price breaks out here. I think that's the impetus, is once gold breaks through 2,100, there's just going to be a flood in the sector, and there's not a lot of supply of cheap shares left. The ratio of HUI to gold really shows how relatively undervalued it is. This is an the best perspective because a lot of companies have issued a lot of shares and have diluted. So I think a market cap ratio would be a little more appropriate, but still, the relative, gold stock silver stocks should really leverage the gold and silver price. And they do so on the way down, but also on the way up. So if we're entering into a breakout mode, boy, these stocks should outperform gold and silver quite well. Investing in gold and silver stocks is not an easy business. During bear markets and so on, you got to be extremely selective. When this market really breaks out to new highs, it's not that difficult. Everything's going to go up. But the companies that will do extremely well will be the top companies, and I think that's important for investors here to look for. First thing that comes down, you have to look at is management. People is very important. Projects, location, financial position. So here's some of my favorite top holdings and some of my favorite investments. Fortuna Silver and Gold, really getting into the gold side. Their new gold mine in Ivory Coast is kicking off online here. This thing is ultra low cost, one of the lowest cost producers, mines. They have other mines not as low as this one will be, but this company has just been destroyed after the Rox Gold acquisition, and they had some issues in Mexico. This is turning around. It's quite undervalued to peers. I think Fortuna is going to do extremely well in this next bull market. They have an excellent acquisition of Rox Gold. Their assets are awesome. AbraSilver and Gold, I've been following this for several years since it started. This is a nice property that Silver Standard used to own that AbraSilver picked up from them in Argentina. This has been growing left and right. They keep finding new discoveries around their initial deposit. They're just hitting left and right. These huge silver intersects right at surface in oxide material, the Jack discovery. It's already got 1.3 million ounces of gold and over 100 million ounces of silver. This is going to keep growing in a big way. And they also have a really nice copper project in southern Argentina that they're drilling right now to see if they can hit the core of this, what they believe is a nice big copper porphyry system. The next company is Silvercorp Metals. It is a company that is one of the few primary silver producers out there because there's not that many. The company has a growth profile of it's got about 6 million ounces of silver production right now, going up to 8 million ounces. But the company is sitting on $210 million in cash, no debt, paying a dividend. They have investments in New Pacific, which gives them another $130 million. The market cap of this stock is like $600 million. This thing is ridiculously cheap. They're going to be doing other acquisitions. The only issue I see is that since they are mining in China, there's a perception that there might be some problems here if China does something with Taiwan. So this stock has been really depressed and it's really undervalued, but I think that's going to start to change here as the silver price takes off and they do some acquisitions. So New Pacific is one of their main investments. This is in Bolivia. This has been there hasn't been a lot of big discoveries over the last 10 years. This is really one of the big ones that has been hit. Silver sand, which, it should be 160 million silver equivalent ounces. That was discovered a few years ago. And they have another project, Carangas, which is just hitting left and right. Really nice silver targets at surface and then a nice gold system below. So they're going to come out with a mineral resource update for the first one for this project in the coming months. And then they'll have a new PEA update this year. So this company, I think, is going to do quite well. It's been an amazing discovery. The next company is Idaho Strategic Resources. This is a junior gold miner I've been an investor in for over 10 years, but they picked up some really nice rare earth projects in the US, some of the top ones listed in the strategic reserves for the United States. These guys uplisted on the NYSE have only 12 million shares, and they have a nice combination of gold production, small, not a huge amount, but profitable small-scale gold production and some nice rare earths, and actually one of the largest thorium deposits in the world. Aztec Minerals is a junior company that has been making some big moves recently. They did they're drilling their Tombstone project, which is a historic silver project in Arizona. They just did their first drill hole, had bonanza silver grades come out from that, so that's looking quite interesting. They consolidated a gold asset in Sonora, just south of this project in Mexico, which was quite interesting to Alamos Gold. So Alamos Gold took a position in the company. They own about 9%. And this project, Cervantes, is right next to the producing gold mine that Alamos has. Kootenay Silver and Gold, boy, this thing is just When silver doesn't do well, this stock doesn't do well. When silver does well, it does very well. This is a leveraged silver play, and they're just raising money now to start advancing their project. They have already 136 million ounces of silver, plus the 5 million ounces inferred category. But they have the Columba, a silver high-grade silver project. That's going to be 100 million plus ounce when they finally come out and do a resource update on that. This is going to do very well when the silver price breaks out. Fortitude Gold, not a lot of gold production, 40,000 ounces a year, but they make a lot of money. No debt, $45 million in cash, nearly an 8% dividend, 4 cents a share per month in dividends. 24 million shares, love it, Nevada. They're doing it right. They know how to return value to shareholders. This is a new company, Prismo Metals. It was just recently financed, which included Vizsla, did a strategic financing in the company at 50 cents a share a couple months ago, and the stock is trading near 30 cents. So I've been picking this thing up. They're doing 3 drilling properties. One of the projects is contiguous to a Vizsla's project in Mexico. So you can see that there's a potential there with Vizsla, something big happening. Stock's very cheap, not a lot of shares out there, and not too many people know about it. So sorry I had to kind of run through the last part of the presentation, but if anyone wants to talk more about some of the mining stock opportunities or the gold and silver market, I'd be happy to talk after this presentation. But thank you for your time, and looking forward to coming back in the coming years when gold and silver are breaking out to new highs, and it won't be this empty. I assure you it'll be elbow to elbow, and everyone will be trying to get in the sector. So it's a great opportunity to be here before that happens.